Hello, and welcome to what will hopefully be the first of many episodes of the Market Master podcast. So, as some of you may know, I have spent the last couple of years or so recreating stock charts from the past and trying to piece together the fragmented pieces of information out there on prior markets into a cohesive picture that we can use in order to better understand how to best approach the market today. My goal in creating this podcast is really just to get the ideas and insights I have on studying the market out of my head and onto paper, so to speak. I feel that this is the best way of helping me solidify in my own mind all of the lessons that studying market history has to teach, and I think it could be pretty useful to you as well. And I don't want this podcast to be interview-based. So most of the time, it's just going to be me kind of monologuing along like today, but I do plan on having some guests later on in the future. I also don't want this podcast to be about my own personal trading or performance. I just don't really see that as being a very interesting or useful topic to focus on for a podcast. And I don't believe that it can provide anything near the value of studying market history. And for the time being, this will be an audio-only podcast, but if I have any charts or any other things to show you guys, I'll probably provide those either in the show notes or on my Twitter page. From time to time, I may discuss current events and the current market, but for the most part, we're going to be focused on what we can learn from the history of the market. Specifically, I'm going to be focused on the years 1875 to 2000, since this is the period with the most amount of easily accessible data. And 1875 just happens to be the first year, or I guess the earliest year that I've been able to find consistent daily open high, low close, and volume information on the New York Stock Exchange. Occasionally, we'll explore other time periods as well, going back to probably the early 1700s. And when I talk about market history, I don't mean learning about the kinds of stories that you might hear in books on the Roaring Twenties or the 2008 financial crisis. It's mostly stories of the people and dealings going on behind the scenes, or the history of something like the ticker tape machine or whatever. I'm talking about the history of the market. I'm talking about studying the actual stocks, the news flow on the stocks, the general market environment, the economic background, the narratives being pushed by financial media at the time, and any other useful information that can help us in studying markets of the past. And I believe that studying the past is extremely important, especially for us traders and investors in the process of improving our game, because outside of real-time live trading, it's really one of the only ways that we have to improve what we do. All right. So since this podcast is going to be mostly focused on the study of market history, there is no better place to start than addressing why we should study market history in the first place. Why do people study history? Is it just because we have an insatiable desire for knowledge that does nothing to help us in our own lives? Or are there important lessons that we can learn only through studying the past? Well, in order to answer the question of why we should study history, we must first understand what it is that we can learn from history and how we can apply what we learn in our own lives. And as I go along in this podcast, just keep in mind how you think what I'm saying could be tied back into lessons on the market. There's going to be a lot of parallels here. And a lot of what I'm going to say is not specifically focused on the market, but more like studying history in general. But it all has direct correlation to how we can better approach the market today. So I'm not going to get into any specific stocks or market environments today, but what I have to say is pretty important in how we can better approach the market. One of the more obvious things that we can learn from history is how we got to this current point in time. We see all the events and outcomes throughout time strung together from beginning to today. This can lead us to assume that the way that things have unfolded is just the way that it had to be. That event X always results in outcome Y. However, this is not necessarily the case. And to illustrate these hypothetical scenarios, we're going to use the terms event X and outcome Y. or some other kind of variation on those. So just bear with me here with all of these letters. It might get a little confusing, but I think you can follow along. So event X, under certain circumstances whose variables cannot all be known, may result in either outcome Y or outcome Z. And some randomness variable may influence the emergence of one of these outcomes over the other. But by going through enough history in different parts of the world and at different points in time, we can see certain patterns begin to emerge. We will see that the various possible outcomes exist in a spectrum on a distribution of probabilities. Now, what I mean by this is that all of the potential outcomes of a certain event, given certain circumstances, will exist as a range of probabilities. Outcome Y could have a 70% probability of happening, while outcome Z has a 29% chance, and some other unexpected outcome may have a 1% probability of occurring. We can see that under certain circumstances, event X has a high likelihood of resulting in outcome Y, but can sometimes result in outcome Z and can also result in a completely unexpected outcome as well. When we see these certain patterns repeated over hundreds or thousands of years with seemingly endless examples, we can learn how to apply their lessons to our own life to influence our own decision-making in a way that is aligned with our understanding of how events tend to unfold. We can therefore make better decisions in our own lives, knowing the odds of how things are likely to affect us in the future. If there is only one thing you take away from this episode, it should be this. When we think about any action we're going to take in the market, it is best that we think about it in terms of probabilities. What is the likely outcome of the action that I am about to take? If I'm going to buy a stock here, what is the most probable outcome that I can expect? The game of trading and investing is about placing your heaviest bets on the hands where the odds are most heavily skewed in your favor. And the only way to know which of these hands has favorable odds is by studying the history of the market to see how the same or similar hands have played out in the past. For example, if we see that people who are sedentary and eat a lot of junk food all day end up much fatter and with generally more negative health side effects, and that people who eat less junk food and move more are generally stronger and healthier, we can use that information to inform how we choose our own lifestyle habits. Many people believe that learning history is just about remembering useless dates and facts. But for the most part, dates are pretty irrelevant. It's not important that you know specific dates or years of events. But what is important is understanding why and how things in the past came to be and how it can still affect us today and how it, along with the unfolding events of the present day, may shape the future. Studying history can also teach us about ourselves and people in general. You can learn a great deal about psychology by simply studying history. Because when we learn about history, most of what we read about is the actions of individual people and groups of people. Of course, there are forces of nature that play a large role in history, such as plagues and natural disasters. But the history that we read about is much more focused on people, how they, as individuals and groups, responded to the actions of other individuals and groups, as well as these forces of nature. For example, in his book, The 48 Laws of Power, Robert Greene lists 48 different patterns that he has observed in the power dynamics between people throughout history. He goes on to detail specific scenarios in which one historical figure successfully follows one of these laws and how another fails to do so. The way in which he came to create these laws of power was by observing patterns in people's behavior throughout time and seeing similar fates of people who made similar decisions. We can use these patterns of behavior that we observe over time to inform how we can expect others and ourselves to behave given certain circumstances and stimuli. It also lets us know that there isn't always just a single potential response to a particular stimulus. The potential responses exist on a continuum. But after seeing similar scenarios play out enough times and under different circumstances in different times and places around the world, we can get a feel for the odds of a certain outcome occurring given the prevailing circumstances. The point here is that there are endless patterns that you can identify by studying history, patterns that can give you insight into how things really work. And this is true for both life and the market. Imagine you walk into a rowdy bar at midnight on a Saturday night. You walk up to the bar carrying a bouquet of flowers and a box of chocolates. You find the biggest, meanest looking man there, tap him on the shoulder, and when he turns around, you tell him that he is the prettiest girl in the bar and that you would love to get to know him better. How do you think he's likely to respond? There are only so many possibilities, but by having seen potentially similar situations before, you can make a pretty good guess at what's going to happen next. You'll likely never even consider doing something like this, even as a joke, because you understand that the odds of that situation ending up with you in a full-body cast in the hospital is much greater than you leaving the bar with a new best friend. Now, you may be thinking this is all well and good, but how can it be of any practical use in my life? Well, for one, it can help us understand how the world really works. Many people try to bend the world around their own ideas and opinions. They form their thoughts and opinions of the world, then expect reality to conform to them, rather than conforming their thoughts and opinions to reality. This almost always leads to immense frustration, incredulity, and disappointment. It is much easier and rewarding to instead shape one's thoughts and opinions around how the world actually, or at least appears to be. It is infinitely easier to allow the observed way in which the world truly functions to influence your ideas and behaviors than to force your own ideas and behaviors onto the world. You can go your entire life denying the existence of gravity, but if you jump off the Empire State Building, you only have about 9 seconds to consider how wrong you really were. Likewise, in the market, if you decide that it would be a good idea to put 100% of your money or more into a pump stock that is down 99% off its 52-week high because you falsely assume that it can't keep going down forever and is bound to make a comeback at some point, you only have yourself to blame when it's delisted the following week. Approaching the market as well as life in a way that does not conform to the actual way reality functions will almost always end in pain. We can think about studying history as a way to learn from the lives of others with all of their triumphs and failures over the course of an entire lifetime. We can either learn through our own mistakes and successes, which can be rather costly in terms of both pain and time, or we can shortcut certain kinds of knowledge by learning from others and what worked or what didn't work for them. Life, much like the market, has no user manual, but we can use history as the next best thing. When we begin to look at the world much more dispassionately and try to see things for how they really work without the bias of our own opinions to cloud our judgment, we are able to make better decisions in the moment. We are better able to plan ahead and make contingency plans, knowing what things could go wrong. We become much better prepared and equipped with the mental tools to deal with the problems that we face, since we have a plethora of previous examples of similar scenarios and potential outcomes to draw upon. This database of experience is something that those who don't study history do not have. This gives us an advantage as we have a better idea of the odds of action X resulting in outcome Y, while the others who haven't studied history are just improvising and making things up as they go along. Or they're using their own limited personal experience to make decisions while we have the experience of masses of people throughout history to draw upon. One phrase that's often repeated is that history doesn't repeat, but it rhymes. When you can look back far enough in history and see all the multitude of events that have happened throughout time and in every corner of the globe, you become less surprised by big events taking place in your own time because you've seen it all before. You may not have direct experience with a certain event, but secondhand experience can still be valuable, and it's often much more experience than what the average person has. When you see wars, famine, droughts, and plagues in your own time, although it might not be a pleasant experience, you won't be one of those people who say something like, "I can't believe XYZ is happening in the 21st century." You know better than to say something like that because you know that there are forces, certain parts of humanity that are just embedded in our very nature. And our nature doesn't change by the decade or even by the century, but over tens or hundreds of thousands of years. History may not repeat per se, but there are events and behaviors that repeat endlessly throughout time. The stage and actors may change, but the song remains the same. There are many types of cycles that occur throughout time, and some of them take multiple generations to play out. And if you don't learn from history, you are doomed to remain ignorant of what may be happening all around you, even in real time. Likewise, in the market, there are things that repeat and could be playing out right before your eyes. But because you're ignorant of the market's history, you won't be able to see and take advantage of certain opportunities when they arise. The biggest problem for us in studying the history of the market is a general lack of accessible quality data and the fact that stock markets have not really been around for very long. So there are only a couple hundred years or so of good stock data to study. And the further back we go, the less data and the less quality data we have to use. However, studying the past 150 or 200 years or so still offers a great deal of insight into the markets that you can't get simply by studying the past 20 years. By knowing history, we are able to make better connections between events that can inform us of how the immediate or medium-term future may play out. This means that we can prepare and plan ahead for potential scenarios that others would be completely unaware of. Studying history can give us a much broader perspective of the world in which we can learn about psychology, politics, global affairs, economics, and other fields of study that can help shape our understanding of the world that we can then use to inform our decisions that we make in the market. All of these principles that I've outlined so far are directly transferable to how we can approach the market. There are limitless lessons that history has to teach us that we can then use in order to profit financially in any market we choose to play. As long as you study the history in the field in which you plan to play, you can learn all that you need to in order to become a master. Whether it's the aerospace industry, politics, medicine, or the financial markets, learning the history of that specialized field will give you great insight into how things really work, how to avoid the major pitfalls, and how to take advantage of the opportunities that you may not even realize were there all along. When asked if he had any advice for young men entering the workforce after the great stock market crash in 1929, Henry Ford said, "He must go back in any art as he can to dig up the very beginning. And the more he goes back, the further he will be able to see ahead." Ford, like many other successful people, understood that the way to become great at something is by learning the history of that field. This is the foundational idea for this podcast, as well as the Founders Podcast, which is about learning the same handful of lessons from the great founders of history. And I highly recommend you go take a listen to that one if you haven't already. Speaking of the Founders podcast. This reminds me of the episode he did on the Wright brothers. They weren't the only ones attempting to solve the problem of motorized flight. There were many other teams of heavily financed engineers and inventors. Meanwhile, the two Wright brothers were just a couple of regular guys who financed their efforts mostly from the proceeds they made running a bicycle shop. The way that they were able to solve the problem of motorized flight was by intensive studying of the history of flight and the science involved. They essentially solved this massive problem that no one else could solve simply by reading and learning more about their field than anyone else. Warren Buffett famously said that he reads about 6 hours a day. He reads not only financial reports and the news, but also biographies and history books. He didn't become the richest investor in the world by being born a financial genius, but he has an insatiable appetite for knowledge, a deep interest in the market, and he's been playing this game since he was a kid. But studying history isn't just a favorite pastime of Warren Buffett, but it's something that many investors and professionals at the top of their field do. One thing that is often repeated on the Founders podcast is that history's greatest founders studied history's greatest founders. The lesson that we can take from this is that if you want to be a great investor, you should study history's great investors. Let me repeat that one more time because it's very important. If you want to be a great investor, you should study history's great investors. As I've mentioned multiple times so far, learning history can teach us to recognize certain patterns and can equip us with a mental database of stimulus and response. In the markets, this can take many different forms. The obvious one would be recognizing technical patterns and building a mental database of these patterns that you could use to trade. But not all setups or databases must be technical for traders and investors. There are patterns macro investors or value investors can recognize as well. Warren Buffett's famous quote, "Be greedy when others are fearful, and fearful when others are greedy," is an observation of a pattern that he has recognized by understanding the history of the market. He has recognized that for his way of investing, it is best to buy when people are lining up to sell and best to sell when people are lining up to buy. You can observe relationships between certain stock groups or industries and relationships between similar stocks in the same industry. I think they call it pairs trading. When you take two similar stocks like Visa and MasterCard, for example, you go long the stronger one while shorting the weaker one in order to profit from the divergence between the two. You can find patterns between bond yields and gold prices, stock prices, and certain economic readings. You can even find patterns in the narrative surrounding the market and use that in relation to price action or some other indicator to find patterns. There are really endless variables to measure on their own in some capacity and in relation to countless other variables that will reveal hidden patterns that you can use to aid you in your own style of trading. By seeing these relationships between certain variables in the market, we can find how to best use them in order to profit from our understanding of the market. And the way we learn to better understand the market is by studying these various relationships and data sets throughout history. If event X results in outcome Y, and we have a profitable edge to exploit, we have just uncovered a piece of the market structure that can be used to our advantage. However, if after studying the past 100 years, we find that this relationship was really only valid in the past couple of years, there is a greater chance that this edge will disappear at some point in the future than if it had worked well over the last 100 years. The further back in time your profitable patterns go, the higher the likelihood is that that specific pattern is an embedded feature of the market structure and is likely to continue to remain so for the foreseeable future. This is why it is so important to study the history of the market. If your edge that you use to make a living from in the market goes away because it was simply a temporary phenomena and not a true part of the market structure, then your source of income could be turned off overnight with no guarantee of it ever coming back. And if that happens, it is very likely that you will end up taking many, many losses before you finally realize that something has changed in the market and that your strategy is no longer viable. These patterns and relationships are so varied and not obvious to spot or teach others how to find and use that no one really ever talks about them. You won't find a book that teaches you how to spot patterns in market narrative or in the relationship between multiple indicators or asset classes. It's just too difficult because it requires a certain level of base knowledge and fluid intelligence to observe these things for yourself. It requires an immense amount of work just to go through enough history to find enough of these examples of the relationships you're looking for. And even then, you're not guaranteed to find any patterns at all. You will, however, find many people trying to teach you how to spot and recognize technical patterns. This is because technical patterns can be easily seen everywhere all the time, whereas most of these patterns we're talking about can't be easily observed. It also requires that you tailor the research of these specific patterns to your own personal approach to the market. So like I said before, a technical trader can look for technical patterns in historical stock charts. A macro investor can look at the relationship between bonds and gold, and a value investor can look at historical valuations of stocks. These things can't be directly taught as they require too much personalization in the approach and must be tailored to each investor. But once you are able to identify the patterns that you can profit from in the market, you can then use them in a historical context to improve your performance. So let's get into how we can apply these lessons of history to improve our game in the market. Market professionals, unlike other professionals such as athletes, don't have very obvious ways to improve their game or to practice. Sure, we have paper trading, but we all know that that really isn't a suitable way to truly practice live trading. And you can only do that during market hours anyways. So how do market professionals practice their game? Many professional athletes review game tape. They do drills, resistance training, and they do cardio to improve the various aspects of their game. As traders and investors, we don't have such obvious ways to practice. So you can probably guess where I'm going to go with this. We practice by studying the history of the market from the perspective of our preferred strategy. So to paraphrase what I just said, we need to apply our personal strategy in the market to the markets of the past. So since I am a momentum trader, I study history's momentum stocks to find all the technical, fundamental, and narrative patterns that I can, going back as far that I can go in history. I can't tell you how to do this if you're a macro investor, but because you likely have a way of approaching the market that has worked for you, you have a starting frame to work from in how you specifically should go about studying the past. You simply approach the past markets from the same angle that you approach today's market. So pay attention to the same aspects of the market that you would as if you're going to trade it yourself. Write notes if you have to. Find out if the way you profitably approached today's market was viable 20, 30, 50, or 100 years ago. And if you don't have a currently profitable approach to the market, then you can study the past and current market to see if you can spot similarities in the structure of the market that have been and will likely continue to remain profitable. This is our version of studying game tape. You can study your own personal tape by keeping a spreadsheet of all of your trades, reviewing those trades and seeing what you've been doing well and what needs work. You can even look for patterns in your own performance. So, for example, you may see that 80% of your winning trades come from stocks in a certain industry or that use a certain strategy. You can then use this information to do more of what's been working for you and to cut down on what hasn't worked. But Just like an athlete, you can also review game tape from the all-time greats. You can review both trades made by the great traders and investors of the past to see how they were thinking and what drove them to make certain trades. And you can review the biggest winning stocks from history to see how they developed over time. Similarly, if you trade futures or other asset classes, you can do the same thing by finding periods of outperformance in certain assets, such as gold and silver in the late 1970s, to study how you could have approached those markets. You can also create your own playbook by reviewing certain events from the past and seeing how different assets reacted. How did stocks react when Nixon took the U.S. off the gold standard? How did currencies react when the Second World War broke out? How did commodities react when the 70s oil embargo was enacted? This is how I think about what I do when I'm reviewing stock moves from the past. RCA in 1928 and 1929 had many similarities with Yahoo in the 1990s. NVIDIA today has many similarities with GM in the 1920s. By identifying these similarities, you can ascribe odds to how a certain stock or a market will or could play out over time, and when you would be best positioned to enter or exit a particular stock. If you know that one stock has a 10 times greater likelihood of becoming a monster winner than the average stock that you trade, then you know that it would be actually reckless to not bet more heavily on that potential monster stock than you would on an average trade. Understanding history can inform you how to best take full advantage of the current and future opportunities that you will see in the market. Studying history shows us patterns of behavior, patterns of stimulus and response that repeat endlessly if we are able to correctly spot them. Once we pick up on these patterns, we can contextualize the present in a more knowledgeable way that will lead to understanding how the world or market really works. Seeing these patterns over and over endlessly throughout time gives us the muscle memory to know how to act when the time is right, and will inform us how to respond when things go poorly or unexpectedly. Asking yourself why the market is doing what it's doing does nothing to help you make or protect your money when the market sinks 8% in a single day. But knowing how to act in the moment will. As Jesse Livermore once said, there is nothing new in Wall Street. There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before and will happen again. There are many times in the market when we hear some pundit or talking head say something along the lines of, "We have never seen anything like this before." But for those of us who have studied market history, there are usually many examples of events that can be used as correlates to present-day events, even if they aren't perfect one-to-one carbon copies. And the good thing is, we really don't need perfect one-to-one correlates of current scenarios to have an idea of how to respond to certain events. We can use past geopolitical events that are reminiscent of current ones, for example. We can use past shifts in government policy to imagine how current or future policy shifts can affect the market. But because no two periods in time are exactly the same, no matter how similar they may be, we can only use the past as a guide, not as an instruction manual. While the psychology of people never really changes, their experiences and interpretation of the world does change with each generation. The generation that experienced the crash of 1929 and the subsequent depression generally harbored a fear of stocks and a very frugal mindset for the remainder of their lives. The generation that came of age in the 1950s and 60s, when the market was soaring to constant new highs, did not have such misgivings about stocks. Similarly, those who experienced the high levels of inflation in the 1970s had a very different view of inflation than the generations who never saw prices inflate more than a few percent in a given year. These differences in experience and perception have a real effect on the decisions they make in the economy and the market. Maybe a certain CPI reading in 1978 could result in a 4% sell-off in the market, while the same reading in 1998 sends stocks up 4%. There is absolutely no way to quantify these kinds of generational shifts in perception, but it is still important to be aware of so that you don't fall victim to believing that one stimulus in the market or economy will always result in the same or even a similar response. We must be able to consider all potentially relevant factors and assign some kind of probability to them, while also knowing that a completely unexpected result could very well occur instead. Studying market history can show you how to handle these unexpected events as well. Now, I can hear some of you asking, but if we aren't supposed to believe a stimulus will result in even a similar response, then why do we need to even study history at all? How is any of this even useful? The answer is that we should be approaching the study of history and the interpretation of current events in the market and how to respond to them in terms of probabilities, not in binary outcomes. And when something unexpected happens, you need to know what the proper course of action is based on your historical knowledge of the market. The resulting outcome of any given stimulus will be a response that exists on a scale of multiple possible outcomes, each with a different probability of being the actual response that we observe in the market. Again, it is extremely difficult, if not impossible, to ascribe a numerical probability of any given event occurring due to a given stimulus. However, by applying our knowledge of human psychology and by studying the past, we can get a sense of the probabilities of a range of different outcomes that we can expect from certain events. There is no mathematical formula for predicting how any given stock, or the market for that matter, will respond. The best that we can do is to use our own judgment based on our knowledge. I know that this might not be a satisfactory answer to you, but it's the only one that I think fits. You have to have a very inquisitive mind that enjoys looking for patterns in history if you want to learn anything from the past. If you want to be spoon-fed the correct answers or given a magic formula, this probably is not going to be the career for you. Or at least you have a much, much lower odd of achieving greatness in any field that you pursue. Even if you are a purely technical trader, there are still vast amounts of things to be learned from studying history. Besides that, purely technical traders could improve their performance by incorporating non-technical elements into their trading. And that's something that I personally have experience with in the past. Warren Buffett and Charlie Munger both studied market history. I guarantee that they both knew who Daniel Drew was. They knew of past market-leading stocks, valuations, manias, panics, and random market stories. Information in the wrong hands is useless and may even be detrimental to performance. But in the right hands, in the hands of someone who understands how to use that information, it can be priceless. Our job is to find those potentially priceless nuggets of information in the gold mine of history. Somewhere in a book or old newspaper from the past is a piece of information that could double, triple, or 10x your net worth. You may not be able to recognize that piece of information when you first see it. It may take years for it to really sink in before you're able to use it. The more information that we acquire and the more we learn from history, the better able we are to incorporate new ideas into our worldview and market view. We may need to understand one certain idea before we are able to profitably use another idea. History is our guide to the present and future. By understanding how people reacted to certain events in the past, we can get a sense of how people in the present or future may react to similar events. We can't expect things to unfold exactly as they did in the past, but we can safely assume a distribution of probable outcomes. We know that there will always be unexpected events that rattle markets to their core. We know that there will always be periods of panic selling and panic buying. We know that investors are, by their very nature, emotional, and that this affects their behavior in the market. If we are able to understand how history has played out and ways in which it could have played out, we can understand how others and ourselves may respond when we are put in similar situations. In the market, there is no secret strategy or method to outperformance. But the closest thing to a magic key that can unlock the secrets of the market can be found only by studying its history. Seeing how things have changed over time and what remains the same can be an eye-opening experience. There is no better way to improve your confidence in your navigation of the market than by understanding how it was best to navigate it in years prior. And the more years you have seen, the better equipped you'll be to handle the unforeseen things the market will inevitably throw your way. That's it for today, guys. Thank you for listening, and I hope to see you again in the next episode.